Netflix shares fell 5% following the Q1 earnings release, opening up a solid buying opportunity for investors. Let's talk about it. Welcome back, guys. Netflix shares fell 5% following the Q1 release and the guidance update, which is opening a buying opportunity that will not last long, as you're saying, Thomas. So give us a quick update here, and then we'll kind of dig into it. What's going on?
Right. I think it was really a strong report all the way around. They beat on the top and the bottom line. Subscriber growth was good. Margins widened significantly. Free cash flow is up double digits. I want to say operating income up 54%. That's huge. This is really a really good report. I think the thing that has the market moving lower is that guidance, even though it was raised, is a little bit light on the top end. And then the shift in reporting strategy. So, some knee-jerk reaction, I think, to otherwise a good report.
Yeah.
Okay, so you just briefly mentioned this, but Netflix did announce that they have added over 9 million subscribers, but then they also announced that they've decided to stop reporting subscriber numbers, which kind of shocked Wall Street just a little bit. I mean, investors aren't really happy about this announcement. It seems like it's been one of the metrics that people have really cared about, so they don't want to see that go. It looks like even with this good report, the stock actually fell 4% that we saw after hours, maybe because of this announcement. What is your take on this and the whole kind of business model evolving here?
Well, right. I think this was kind of inevitable. They stopped giving guidance. I think it was last year, and that's part of the business's maturity. It's no longer a growth company. It's more of a mature blue chip tech stock. Its revenue is impacted by far more things than just revenue growth or by subscriber growth. And this is just a shift in the direction to get the market kind of away from that. But yeah, I don't really see it as a big deal. So like I said before, I think this really is a knee-jerk reaction to some news. Ultimately, the company is in fine shape, but I do think that Chris disagrees with me on that.
Yeah, I would say it's not so much a question of disagreeing with you. First of all, I totally agree with you about the market reaction to the report. I think this was a classic sell the news earnings report. I think the market was looking for any reason to just take a little bit off the top of Netflix so that they can dive into it later at a better price. As far as the subscriber numbers go, I understood last year why they stopped issuing a forecast for subscriber numbers. This to me seems a little bit I don't know. I don't like it when the company's basically telling you, we'll tell you what to evaluate us on, don't evaluate us on this. Mm-hmm. And that seems to me to be what Netflix is doing. They're saying, don't look at our subscriber numbers. Why? Well, because we're telling you not to look at our subscriber numbers, which is just seems a little odd to me. I think Netflix understands why they're doing it, and it makes sense to me. But at the same time, why not just report your subscriber numbers?
Imagine investing in the next big stock before it hits its peak. Our exclusive report, 7 stocks that could be bigger than Tesla, Nvidia, and Google, introduces you to the growth stocks set to skyrocket, offering unmatched returns for your investment. These aren't just any stocks, they're the carefully selected potential market leaders of tomorrow. Download this free report now to discover the next big superstars. Let us know down below what you think about this. Are you mad that they're not reporting subscriber numbers? Do you kind of think that it doesn't matter? We want to hear from you. But let's take a look further into margin news and guidance here. Margin news is maybe the brightest spot in the report. Guidance is solid. What do investors need to know here?
Yeah, I think right now the thing investors should focus on is the cash flow. The cash flow is improving significantly. They're using that to reinvest in the business versus funding it from external means. They recently acquired investment quality credit ratings. So they're leaning into that, trying to improve their balance sheet even more in that regard. Another change that they had made was some of their financial metrics, and they're going to they increased their revolving credit facility to improve liquidity. That's not necessarily a bad thing. It's not a sign of any kind of danger, just them trying to access more available cash for improved cash efficiency. So I think long-term, it's just all good news.
To me, one metric that I would be paying attention to would be their continued spend on content. One of the things that perhaps bulls were looking for was Netflix suggesting that they were going to be putting a harder cap on that kind of spending. And the only thing that they said, I believe I'm right, Thomas, is that they said they're going to they're going to cap it in the sense that they're going to make sure the content spend doesn't exceed revenue, but they're not necessarily going to cap content spend.
Yeah, I mean, they're a content company, so they're going to have to
Right.
continue to invest in that. So I think that's something that investors are going to want to watch,
Yes.
but don't ever expect content spending to go away.
No.
Right. Yeah. So,
But that's part of that's a concern, I guess I would say, if you're on one side of the Netflix camp or the other, is this is a business that requires a lot. It takes a lot of money to generate that content.
totally. And that's kind of where a lot of the margin gains came
Yep.
from. Not all of them. There was some attribution to the timing of spending on content. So
Right.
certainly they're going to spend that money sooner or later, but hopefully it all
Right.
comes accreted to the bottom line.
Okay, now let's talk about the analysts here. How have analysts reacted to Netflix's latest earnings report? And what are their kind of expectations for the stock's performance moving forward?
Well, right. I would say that the response so far has been mixed, but mixed in that way that's actually good for the stock. I think we tracked 5 or 6 revisions so far. 2 of them were negative. One was a downgrade to hold, but its price target is above consensus. One was a lowered price target. The lower target, the new target, is still above consensus. The other 4 that we're tracking so far include an upgrade with a price target increase and 3 other price target increases that have lifted the consensus target by 10% just in the last 30 days. So we definitely have upward bias in the analyst sentiment. They are leading the market higher. So that totally plays into the idea that this is a buy the dip opportunity.
Yeah.
So let's consider their market position here. What risks does Netflix face at its current stock price level? And maybe let's look at what could trigger a rebound or maybe a further decline here.
Well, I think the biggest risk that I see was just the valuation, trading at 35 times earnings ahead of the report. The market certainly wanted to see a more robust guidance than it did. So we maybe have a little bit of price multiple contraction going on. I think some other major tech companies have also pulled back from that high level. So kind of in line with market conditions right now. Again, I think this is a buy the dip opportunity because looking forward, earnings will grow. Looking towards next year, the P&E is like 27 or 28 times earnings. So there certainly is some leeway in there for the market to kind of contract a little today in order to make those gains for tomorrow.
I agree with Thomas there. I think, there's no doubt that Netflix is going to be the leader in this. I heard it said the other day, I thought it was pretty funny. They said, you don't really hear about the streaming wars anymore because Netflix just won. So
Right.
All right. Well, thank you everyone for joining us for this update on Netflix. As always, don't forget to let us know your thoughts on this investment in the comments down below. Otherwise, we'll be right back here on this channel and at marketbeat.com with the latest news so that investors can stay on top of things. So stay tuned for more, of course. Thanks, guys.